Good morning, everyone. Maybe Amharic is better. Yeah, well, special acknowledgement to Ambassador Brooke, the ambassador of Ethiopia to the UK. And amongst us also as a panelist is Her Excellency, Director General of Capital Markets Authority of Ethiopia, Hanna Talukwu. Warm greetings to delegates, investors, and development partners. FSD Ethiopia is proud to sponsor this important summit today. As you know, Ethiopia's growth story is being rewritten through financial reform, digital transformation, and green ambitions. Our message basically for today is finance is not just about numbers, it's about unlocking opportunities and resilience for people and the planet. Since the ambassador is speaking after me, I think in the interest of time, I won't go into many of the statistics that I have, but for those of you that may not know Ethiopia, and I see very many familiar faces, Ethiopia's economy is USD 174 billion in terms of our GDP, fifth largest in Africa, and projected to grow by 7 to 7.2% in 2025. Our financial sector liberalization, for the first time, foreign investors can now participate up to 40% ownerships in banks. Retail, wholesale, and export sectors are also opening up, creating new competition and innovation. The capital markets, as you know, Ethiopian Securities Exchange was launched in January this year, in 2025. Over 80 million mobile users exist out of 130 million population. That would include Telebir, M-Pesa, Chapa, etc. Account ownership has jumped from 41% in 2022 to 52% in 2023. Digital payments are transforming access to MSMEs and rural communities. So we really believe that liberalization is not about opening up just our markets, it's expanding inclusion and investor confidence. FSD's role is making finance work for people and the planet, working closely with the National Bank of Ethiopia, Capital Markets Authority, and Ministry of Finance to advance financial inclusion and green finance. We support ESX. We've built the foundations for transparent, liquid, and credible capital markets. FSD Ethiopia acts as a bridge between global capital and local opportunities, supporting innovation, policy design, and financial infrastructure. Our call to action today is Ethiopia faces a 4.2 billion USD MSME financing gaps, yet investors' appetite for impact and green investment is believed it will continue to grow. We invite partners to co-invest in renewable energy, climate-smart agriculture, green manufacturing and industrial parks, inclusive fintech and digital solutions, nature-based community-led enterprises. Let's turn Ethiopia's climate risk into shared investment opportunities, delivering returns for investors and resilience for communities. My last point would be, together let's finance the future, one that is open, green, and inclusive for generations to come. Our theme, as you've seen, is harnessing capital markets, attracting global service providers to Ethiopia. We have a very good, I think, about 5 panelists, and I'm pleased to say that we will be here until 1 o'clock today. We're looking, obviously, as in the words of Hanna, we're looking for potential investors in service providers, as well as intermediaries and investors. Let me hand over now for the keynote address by Ambassador Brooke, followed by a presentation by Hanna Talukwu, who is the Director General of Capital Markets Authority. Thank you.
Thank you, Excellencies, distinguished guests, esteemed panelists, ladies and gentlemen. Good morning. It is both a privilege and a pleasure to welcome you to this Ethiopia Investment Summit held here at AFSIC. I bring you warm greetings on behalf of the government of the Federal Democratic Republic of Ethiopia and our mission to the United Kingdom and Northern Ireland. Allow me to begin by expressing our sincere appreciation to the organizers for creating this vital platform, and to each of you here today for your time, your attention, and most importantly, your growing interest in Ethiopia. Today marks a defining moment in our country's economic journey. With the establishment of the Ethiopian Securities Exchange, the first of its kind in our history, Ethiopia is taking a bold and strategic step forward in modernizing its financial system and integrating it into the global capital market ecosystem. This is not just an event of national significance. It is a signal to international partners that Ethiopia is entering a new phase, one built on openness, trust, and institutionally anchored reforms. Excellencies, the creation of a capital market in Ethiopia is not a standalone reform. It's part of a broader, deliberate, and ambitious transformation agenda. Over the past few years, our government has initiated a range of structural reforms aimed at unleashing the potential of the private sector, strengthening governance, and enhancing macroeconomic resilience. We have liberalized key sectors such as telecom and logistics. We have modernized our investment and commercial legal frameworks. And we have established independent regulatory institutions to ensure transparency, stability, and alignment with international standards. These efforts are guided by a clear strategic vision to build a diversified, inclusive, and globally connected economy, one that creates opportunity for all Ethiopians and generates value for international partners. What makes this moment particularly compelling is that Ethiopia is not simply inviting capital. We are inviting partners. We are seeking to work with institutions that bring not only finance, but also knowledge, innovation, and long-term commitment. The capital market we are building is designed to be inclusive, transparent, and forward-looking. It will serve as a critical bridge, connecting global investors with high-potential entrepreneurs in Ethiopia's real economy. Whether you are a fund manager, a broker, a rating agency, a legal advisor, or a technology provider, your role is not just welcome, it's essential. You have the opportunity to be part of the foundational architecture of one of Africa's most dynamic emerging markets. And as of many of you in this room know, there is real opportunity in Ethiopia. We are a country of more than 120 million people with a young entrepreneurial population and rapidly expanding access to digital and financial services. We are strategically located in the Horn of Africa with access to regional and continental markets and trade corridors. And we are implementing reforms that reduce risk, enhance transparency, and improve the overall ease of doing business. Our track record speaks for itself. In recent years, Ethiopia has successfully attracted significant investment across manufacturing, infrastructure, and services. In the specialized economic zones, international brands in textile and apparel have chosen Ethiopia as a base for their African operations. In telecoms, Safaricom's entry marked a historic milestone. In finance, we have seen the first Forex-dominated loans executed, and our banking sector is preparing for the entry of global financial institutions. These are not isolated events. They are indicators of momentum, of a market that is maturing, opening, and inviting deeper engagements. This brings me to our most recent and potentially most transformative reform, the opening of Ethiopia's financial service sector. In 2025, Ethiopia introduced legalization allowing foreign banks to operate within the country, either as subsidiaries, joint ventures, or equity partners in domestic institutions. In parallel, we liberalized digital financial services, including mobile money and payment platforms. These changes are expanding access, boosting innovation, and laying the foundation for a truly inclusive financial ecosystems. The launch of our capital markets will complement this liberalization by providing new vehicles for financing, capital raising, and investment. The Ethiopian Securities Exchange will support SMEs, infrastructure projects, and public-private partnerships, giving both domestic and international investors more instruments to participate in Ethiopia's growth story. Distinguished guests, Ethiopia's long-term development vision, as outlined in our 10-year perspective plan, places the private sector as the center of national growth. A functioning, well-regulated capital market is not only complementary to this vision, it's critical to realizing it. And so, today's summit is more than a dialogue. It's an invitation to shape a new financial future, one that's grounded in mutual interest, shared values, and institutional collaboration. To those of you considering entry into Ethiopia as capital market service providers, let me say this clear. Now is the time. Your engagement today will position you as first movers in a market that's young, ambitious, and eager to learn. You have the opportunity not only to participate, but to influence, to build, and to lead. Ethiopia is committed to reform, to partnership, and to growth. We are not rushing. We are building carefully, transparently, and with purpose. But we are not hesitating either. We are ready to work with partners who share our belief in the potential of frontier markets and in the power of capital to unlock opportunity, build institutions, and improve lives. I encourage you all to listen closely to the perspectives that will be shared during this session from our regulators, our legal experts, our market actors, and our development finance partners. Let this be the beginning of a deeper engagement between Ethiopia and the global capital community. Thank you once again for joining us, and I wish you all productive, insightful, and forward-looking summit. I thank you.
Let me invite Hannah Talukwu, Director General of Capital Markets Authority, for her presentation.
Good morning, everyone. Greeting Excellencies, distinguished guests, colleagues, and partners. It's such an honor to be here among leaders and innovators shaping the future of Africa's financial markets. I'd like to extend my sincere appreciation for AFSIC for bringing us all together under one platform, and for, of course, FSD Ethiopia in Africa for their continued support in advancing financial sector development across the continent. For us as Ethiopians, I'm sure Ambassador Brooke have given us a very foundation of what I'd like to say today. But for Ethiopia, this gathering comes at the pivotal moment as we move forward with the establishment of capital markets, which is a bold step toward unlocking investment, innovation, and inclusive growth. It represents both a national milestone and a regional opportunity to collaborate, share experiences, and build lasting partnership. Before I dive into capital markets, I'd like to give you some numbers about Ethiopia. In terms of general population numbers and investment opportunities, if you take Ethiopia, it's a large population, a large market with a 3% annual increase. It's not only about the size of the population, but in terms of specific numbers, 19 years is a median age in Ethiopia. And there is a rising middle income class in Ethiopia, and 70% of the population is under 30 years old, and there is 25% and more of urbanized population, and there is still a 5% growth of urbanization in the country, and there is a huge penetration of mobile services. More than 60% of the population has access to mobile and telecom services, and we have close to 50 million internet and telebr users and other mobile money users as well. In terms of economy and foreign direct investment, there is a huge increase in FDIs in Ethiopia. For example, if you take even in comparison with other African countries, 6% of the FDI coming to Africa is going to Ethiopia, which is amongst, from 54 countries, it's the third largest FDI receiving country. And in terms of Eastern Africa, close to 30% of FDI goes to Ethiopia. And in terms of low developing countries, it's 11% comes to Ethiopia, and it's a huge number, which shows confidence of an increasing confidence of investors in Ethiopian market. Specifically coming to capital markets, with all honesty, capital market in its centralized and regulated form of it is very nascent. But as you can see from this line, the practice to establish a capital market goes back to pre-1990s in Ethiopia. But because of the economic regime that's introduced back in the days, abolished the development of capital markets in Ethiopia. And then in 1990s, that activity resurfaced, and Ethiopia was fortunate enough to establish share companies by IPO without the presence of a regulated market, without regulator like Ethiopian Capital Market Authority, without an exchange like the Ethiopian Securities Exchange, and other infrastructures, including CSD, were able to build capital market-like activity, and we were able to establish more than 20 banks, insurance companies, more than 15 microfinance institutions. But in 2019, there was a homegrown economic reform introduced in Ethiopia, not just for capital markets, but an in-depth reform, economic reform in Ethiopia. Then capital market was formally introduced, and in 2021, the Capital Market Proclamation was enacted, and this was a landmark reform, creating the legal foundation for fully regulated market in Ethiopia. And then shortly after, the Capital Market Project implementation was set up, and then the implementation journey has gone. In terms of the structure, I know most of you are familiar with what capital market looks like, but I bring this structure because our framework closely mirrors that of most of established capital market worldwide, reflecting global best practices. We have intentionally designed the structure and process to align with international standards and support seamless integration with, of course, Pan-African market initiatives. At the center, you will see ECMA as a regulator, Ethiopian Capital Market Authority, and the regulator is responsible for setting the rules, licensing the market, participants, and ensuring investor protection, and of course market development as well. And as you can see, you have the exchange and the Central Securities Depository, which does settlement, clearing, and custody services as well. In terms of the exchange, has been authorized to conduct not just the usual capital market products, but also to do money market operations, including T-bills and inter-money market operations. In this, the exchange has facilitated, since its operationalization in October 2024, has facilitated a cumulative transaction exceeding 1 trillion Ethiopian birr, which is close to $6.8 billion, a major milestone demonstrating strong market activity. The system, procurement, and the trading system is all complete and operationalized. Of course, the CSD is also established under the National Bank of Ethiopia and operationalized. these are the objectives of CCMA. I wouldn't go through them, except one about the development of the market. As a nascent market, we can't just do the conventional things most regulators do, including investor protection, reducing systemic risk, and establishing a fair and orderly market. But we have a responsibility of developing the market. These are the list of capital market service providers the authority license and regulates. I'm sure you know all of them, but I want to talk about the three ones that are highlighted. Till now, we have 11 licenses in the market. The three of them are investment banks, and one we have broker and dealer, and the rest are transaction advisors or securities investment advisors. The three ones are especially uniquely important to Ethiopian market. The Sharia advisors are key to unlocking Islamic finance. With over a third of Ethiopia's population practicing Islam, demand for Sharia compliant products is strong and growing, and licensing a Sharia advisor ensures financial inclusion, which is meaningful, authentic, and trusted. And in terms of collective investment scheme operators, has enormous potential to mobilize savings and retail investment in Ethiopia, because even without the existence of a regulated capital market, the role of retail investors were tremendous in establishing the entities I have mentioned earlier, including the banks, insurance companies, microfinances, and non-financial companies, including healthcare, education, transport and logistics, and many other companies in different sectors. But now, channeling the retail participation through a formalized and supported by a professional is absolutely important. And the other example for the retail participation is, as you might be aware, we have done the first IPO with a regulator present with one of the biggest SOEs and telecom companies in Ethiopia, which is Ethio Telecom. The offer was started last year, October, and it was up for 4 months, and we were able to secure the participation of close to 50,000 retail investors in just one offer. So there is a huge potential of retail investors' participation. I understand we have to balance between institutional retail and retail investors, but we have a huge base. As I have mentioned the number, we have close to 130 million population, with most of it, more than 70% of it, is below 30%. So there is a huge need of bringing all this retail investor potential into channeled through CIS schemes and bring them to the market. And the other one is credit rating agencies. In Ethiopia, we haven't had, I'd say, a corporate debt issuance per se. There are some activities in sovereign debt issuances, both local and international, as you are aware. But in terms of corporate debt issuances, we haven't had any, especially with the presence of a regulator. So there is a huge potential. As I have mentioned it earlier, we have a number of financial institutions, telecom companies, and others in transport and logistics, and many other sectors, including energy. They need a support regarding issuances. I know credit rating agencies are not the ones that are hand-holding the actual issuances, but we need credit rating companies to give investors the confidence they need to invest in debt issuances. Now, with Ethiopian Airlines needing a lot of fundings for the new port and other state-owned enterprises with a huge need for debt issuances, we need credit rating agencies to come to the market as well. I know I was telling, I think, some of my colleagues that debt issuances and credit agency problem is a chicken and egg problem. For you to have a credit rating agencies, you need to have a debt market, a mature one. And for debt to flourish, you need a credit rating for the vote of confidence. But we welcome for foreign credit agencies to operate in Ethiopia, and we also welcome credit rating agencies to be established in Ethiopia and work with us. This is basically to give you a confidence to come to the market. We have a very predictable and clear process of securing a license in Ethiopia. As you can see, you need a company, of course, and then there is minimum capitals for each licensing categories. I think the maximum is 100 million Ethiopian birr, which is less than $1 million. And you need some documents important to your respective licensing categories. And then, as you can see, you can interact with the regulator and secure your licenses. You can go to our website. You can get your self-assessment, toolkits and everything. It's as easy as I say it now. These are basically the milestones. You can see, you can do a self-assessment yourself and submit your applications to the authority, and then being reviewed and feedbacks will be given, and then you'll have your licenses. This is actually how we do it, and it gives you, I think, a clear picture of what will happen if you come to the regulator to interact to secure a license. The $1 million question. Is Ethiopia open for foreigners? The answer is an easy yes, absolutely yes. It's open. At the macro level, the Ethiopian government has undertaken a significant reform to open the economy and attract foreign capital. This includes the July 2024 exchange rate liberalization and introduction of guaranteed profit repatriation for foreign investors, access to sectors previously closed to foreigners such as housing, retail, telecom, and banking has also expanded, demonstrating a clear commitment to integration with global economy. With this broader reform landscape, ECMA, the authority, fully supports foreign participation in the capital markets. In fact, our first licensed market participant was a foreign-owned subsidiary. You have Tedros Seaside. Deloitte is the first licensed entity in Ethiopia. We are currently finalizing, of course, a seamless regulatory framework for foreign investors, both retail and institutional investors, to come to Ethiopia, but the existing regulatory frameworks also allow foreign participants to come to Ethiopia as well. I think I have mentioned these numbers, of course. Ethiopia's growth story is anchored in strong demographic and structural fundamentals, as you can see, with a population exceeding 130 million, the majority being under 25. Ethiopia has one of the youngest and fast-growing population in Africa. The economy is also undergoing major structural reforms. Despite global economic headwinds and internal pressures, Ethiopia achieved 8.1% GDP growth, as you can see, in the year 2023-2024, one of the highest growth rates in Africa, significantly above the regional average of 3.4%. Looking ahead, the country's capital market is projected to grow to USD 8.5 billion in just 2 years, underscoring the scale of opportunity and accelerating pace of financial sector development. What makes Ethiopia's capital market attractive? There are several compelling reasons, as you can see. The first one is strong infrastructure development. The establishment of ECMA itself, the creation of key market infrastructures, including the exchange and the CSD, signals a diverse government-backed commitment to deepen financial intermediation. The second one is untapped market potential. For decades, Ethiopia operated without a formal stock exchange, leaving capital formation almost entirely dependent on bank lending, which still accounts for over 90% of financial sector assets of 2023. The transition to a functioning capital market opens a large, previously unmonetized economy to both equity and debt instruments. The third one is robust regulatory development. ECMA is actively developing a comprehensive regulatory framework which adheres to international practices and standards. The other one is a significant listing pipeline, including the market has seen major SOEs like Ethio Telecom successfully completing their first IPOs. Ethiopian Airlines is also establishing a special purpose company to develop a 10 billion Bishoftu International Airport. Other large SOEs and financial institutions are also expected to follow, signaling expanding opportunities in infrastructure investment and capital market activities. Finally, massive investment mobilization. The market is being designed as a regulated and transparent platform to channel both domestic and foreign portfolio investment. This will help unlock Ethiopia's substantial and underutilized domestic savings and direct capital towards productive and growth-oriented sectors. I want to talk only a little bit about Islamic market, because now Islam is the second largest religion in Ethiopia, practiced by more than 35% of the population. This makes Ethiopia home to one of the largest Muslim population in Africa and indeed globally, providing strong foundation of the growth of Sharia-compliant financial products. According to the roadmap we have done in collaboration with FSD Ethiopia, out of Ethiopia's 32 banks comprising both full-fledged Islamic banks and conventional banks with Islamic windows have collectively accumulated assets close to $1.5 billion. According to our study as well, the momentum is accelerating between 2023 and 24. Islamic deposits grew by 40%, while outstanding Sharia-compliant financing expanded by 51%, now exceeding USD $1.2 billion. This figure reflects robust and growing demand for Islamic financial sector. So if any one of you is interested to work in Islamic finance sector, it's open. And the other key area of focus in Ethiopia is Green Capital Market Initiative. This aligns directly with countries' climate resilience goals and the 10-year development plan. And the authority is closely working with partners to develop financial instruments that promote sustainable investment, including green, sustainability-linked instruments, green sukuk, and ESG-aligned investment. We're also leading the development of national green taxonomy to define and classify sustainable economic activities in Ethiopia. Beyond that, a national carbon market strategy is developed to support the creation of carbon credit-linked instruments as well. So the last one I want to mention is SME, of course. With this thematic product, the Capital Market Authority is committed to creating a market ecosystem that provides alternative, diversified, and sustainable financing mechanisms for MSMEs. They are the backbone of the Ethiopia's economy, but they traditionally face, as you all know, credit constraints from bank-dominated financial sectors. The capital market is viewed as a vital solution to unlock long-term and non-bank dependent funding for these businesses. So we're trying to address those questions and requests from SMEs as well, to one, to support the SMEs themselves, two, to have an accommodating capital market in Ethiopia. Finally, a call for action. Why do I have to say all these things to you today? As we stand at this juncture in Ethiopia's financial evolution, the opportunities before are both vast and compelling. Ethiopia's capital market is not just a new platform, it's a gateway to unlocking the potential of one of Africa's fast-growing economies, a young and dynamic population, and a government committed to reform and openness. Whether you are an investor seeking new frontiers, a service provider aiming to support market growth, or a partner in innovative sectors like Islamic finance and green capital markets and fintechs, Ethiopia offers a uniquely fertile ground for collaboration and impact. We invite you all to join us on this journey, to contribute your expertise, capital, and vision to help shape a modern, inclusive, and sustainable financial ecosystem. The time to invest in Ethiopia's capital market is now, so let's seize the moment and support us in building a resilient market. Thank you so much.
Thank you to both Ambassador Brooke and Hannah for the excellent presentation and remarks. Can I now invite all the panelists to come to the stage, please? In the meantime, I'd like to introduce Michael Hapti, who will be taking over as the moderator for today. Michael is the founding and managing partner for Spiro Advisory. He's also the former Chief Operating Officer at Ethiopian Securities Exchange. He played a very important role in setting up the foundations of ESX from the beginning to where it is now. So later, if you have any questions related to the Ethiopia Securities Exchange, please, Michael is here to take your questions. Michael, over to you.
Thank you. You can hear me okay? Welcome, everybody. I'm very honored to have a distinguished panel here. I think the DG has set the scene very well. I know the focus is capital markets, but obviously we have a panel from a variety of people, both on the advisory side, as well as DFIs here, so investors, capital market advisors, institutional investors, and also the SME side. So I've been told to mention something about the app. Really appreciate the AFSIC organizers. Want to remind you that you can book meetings with other delegates on the AFSIC event and meeting app. So I've done my part for you. I won't read everything, but I'll get into it. So we don't have a lot of time, so I'll be trying to ask some of these questions as fast as possible, but I'll do an intro first, very quickly. I'll go in order. This is Viviane Infante. I think I said your name right.
Perfect.
She is a member of BII's Africa coverage team. She has held the roles of country director in Ethiopia, covering the Horn of Africa and DRC, where she lived from 2015 until 2021. So she's been there for 6 years, longer than me even. She has been instrumental in the organization and closing of various landmark BII investments, including Safaricom Ethiopia, the first private telecoms deal in Ethiopia, and Dashen Bank, which is one of the largest banks in Ethiopia, the first Forex-denominated loan in Ethiopia. So let's welcome Viviane. And then next to Viviane is Raisa Belliard. She's a sustainable investment professional specializing in emerging markets. She's a VP within the Africa Coverage and Blended Finance team at Mitsubishi UFJ Financial Group. It's a lot of words. So at MUFJ, and she works in the innovative initiatives across Africa. She worked at BII before, so you guys must know each other, I'm assuming. And then the Canada DFI prior to that. So she can give us a perspective from the institutional investor side. I know the DG brought up topics on foreign portfolio investment. It'd be interesting to get your views on that side, what you see from where you sit. Next to Raisa, it is Rahel Bundajani. She's the founder and CEO of R&D Group, a company dedicated to strengthening Ethiopia's SME and startup ecosystem through entrepreneurship support, digital innovation, and access to finance. And then next to her, it's Tedros Sisay. He's a partner at Deloitte, East Africa, and he leads the M&A practice in East Africa and economic advisory in Africa. He's part of the equity capital markets leadership team, and he played a pivotal role in developing Ethiopia capital markets ecosystem. He actually led the first licensed intermediary in the Ethiopian Capital Markets Authority, so they've been doing a lot of work there over the past year and a half, so it'll be good to get his reflections. Now that I've introduced everybody, I'll start with Viviane, so we can get quickly into the Q&A. We have about 30 minutes, I've been told, and then 10 minutes for questions. So I'll start with you, if that's okay. From your perspective as a DFI with long engagement in Ethiopia, what makes Ethiopia's capital markets attractive today for international service providers, but more importantly, for investors like yourselves? What do you see? You've been there since 2015 to 2021. What are the changes you've seen, and then what do you foresee going forward? It would be good to get your reflection.
Thank you. So thank you very much for the invitation. It's obviously a privilege to be a part of this panel. I think coming to speak here today brought quite a bit of self-reflection to ask myself those very same questions, because so BII has been an investor in Ethiopia actually since the 1970s. We were investors in the Kumaro tea plantations way back when the tea plantations were nationalized. And then, we were kind of always trying to find a pioneering opportunity in the country whenever the opportunity arose. So whether it's first anchor investors in private equity funds or first kind of key players in putting the Safaricom Ethiopia consortium together, and lately we joined up with another DFI with FMO to lend in Forex to an Ethiopian bank. That was the first kind of that. So then looking back to the progress over the last few years, let's say since 2018 when all of these reforms started, it's just nothing less than extraordinary. And so where do DFIs sit in the middle of this very rapid change? Ethiopia is unrecognizable from the day I visited and I went there to stay in 2018. Landing in the airport today is a massively different experience than what it was at that time. So there's no way back. Ethiopia is moving forward, and this is the reason why it is one of the main focus of frontier market investment strategy for BII. So I guess I wanted to share that within that frontier market strategy, we have an initiative that we lead alongside two other DFIs. It's called two DFIs Proparco from France and FMO from the Netherlands. And this initiative, in short form, is called ARIA, Africa Resilience Investment Accelerator. I see a lot of people nodding here. Several years ago, we went about setting up an office in Ethiopia where we share that representation, an ARIA office, and we have a country rep who's based in Addis Ababa. His name is Surafel Kelemework. And these three DFIs really empower Surafel to find and create a very solid pipeline of investment opportunities in Ethiopia. And a number of the investments that have arisen recently from these DFIs come from ARIA's pipeline. So yesterday I was participating in a panel, and one of the panelists made a really interesting comment that I thought would be applicable for today. And he talked about, in the context of frontier markets, in the context of Ethiopia, I thought, thinking about kind of the capital markets and the evolution of businesses in countries like Ethiopia, a little bit like an escalator. So where you have the SMEs, the MSMEs at one end, and then you have at the top, you have the larger conglomerates. But there is kind of a rolling kind of journey upwards, right? And ARIA, to some extent, aims to support that journey. So not only through investment, but we acknowledge that there's so much need there is for becoming investable, right? Investable to a DFI. There's so many companies that are successful in the Ethiopian ecosystem, and yet they don't know sometimes that we investors exist, DFIs exist. If they know, they perhaps are shy or don't have the corporate governance systems. They might not have kind of the sophisticated methods that a DFI would require. Let's say financial models, right? So we are providing technical assistance to some of these very successful companies, and discussing this with colleagues who are actually sitting here who fund ARIA. We were chatting the other day that there is such a demand for example, improvement of financial models, right? So we do it with one, with two, with three. How can we actually increase the provision of support for financial models? And so this is kind of a small DFI ecosystem. Then once you have capital markets, then that we need to find a way, capital markets authority, to say how do we multiply these kinds of skills, because these are the companies that are going through the escalator to become listed at some point. And I'm really happy that, Hannah, you were talking about MSMEs as much as the larger conglomerates. So if I look at the investment space in Ethiopia and how ARIA is looking at it, you have on the one hand the SME space. We have actually supported all sorts of tickets from 200 million to very soon to be published a $5 million ticket, and a phenomenal Ethiopian business. But so you have let's say the SMEs at one end, and then you have the conglomerates at the other end. We DFIs don't really tap into that. There is as much job creation, there is as much expertise that can be transferred from the big conglomerates down to or off to the SME space. How do we create these conducting ecosystems so that those that are perhaps not at par to become investable, we can support them towards that journey? And just finally to conclude that we are in a moment where DFIs we are privileged to be able to be focusing on frontier markets and to be able to feel we are one of the few in the donor environment that are still well-funded, have stable balance sheets. So many fantastic donor programs are cut, we know, right? They no longer exist. So it is our responsibility as DFIs to think, how do we multiply these activities that we are encouraging and conducting? How do we mobilize in a way that, I mean, you wouldn't believe it, but our office is just down the road on Victoria Street, as you know, and we rarely connect with colleagues in the City of London. It's just maybe 10 stops away. So why is that? Why can't we not, let's say at BII, create those more improved connections so that then we can reach out to capital markets and kind of increase that investment footprint even more intendedly. So that's all work in progress, and that's why I said it's self-reflection, because I can't sit here and say, well, you know, you guys need this and you guys need that, because you're already doing it. You have proven that it's all work in progress. It's a little bit about communicating to the rest of the world that all of this is happening. I know that you are doing an amazing job, but that is more about kind of increasing the awareness, and also us DFIs developing a responsibility to connect to that world so that we can maximize and maybe make up a little bit for the gap that has opened up in recent times. Thank you.
No, thank you very much. It's very well noted. You know, a few things struck. I think some of the words you used, you know, extraordinary change, unrecognizable, and also I think the last part about awareness creation. I think we have to promote it. One of the reasons I think we have a big delegation here is really to promote more awareness as to exactly what's going on. But very well noted. I really appreciate your clarity. I think also, just in summary, I think being an anchor investor is a very important role for a lot of DFIs. It may not be obvious to everybody, but it's not that you're the biggest investor, but anchoring it can crowd in a lot of capital.
Exactly.
So one of the reasons, you know, we're here is not just to attract service providers, but really to attract more foreign portfolio investors who need anchor investors like BII, in summary. But thank you. I'll move on to Raisa next. So from the global institutional investors side, you know, in your view, what factors do global institutional investors, I know the DG was talking about foreign portfolio investors earlier, but you know, you face these guys on a daily basis. What do they weigh when deciding to enter a frontier market like Ethiopia, especially one that's been kind of closed off for a long time? It'd be good to get your reflection, and how can capital market service providers accelerate kind of this story and build on it? It'd be good to get your reflection on that.
Yes, definitely. Thank you so much, and thank you to FSD Ethiopia. It's an honor to be here as MUFG Bank and to be able to share our perspective as a commercial bank and potentially an institutional investors. For us, I'd like to summarize it in three main points. The first point would be to have in this market, I mean, our ability to see in this market a strong and stable public sector, supported by efficient reforms, and also, most importantly, having the public sector as a key backing significantly the institutional investors who are coming into these markets. And I think this is something that we've seen a lot in Ethiopia in the past few years, not only following the IMF program that has been established last year, but also looking at all the reforms that have been put in place by the Republic by themselves. Here I'm talking about, for example, the strengthening of the SOEs, the state-owned entities, supported by EIH, who has been doing an amazing job in that, on that perspective. The opening of the market to the financial institution, and obviously the opening of the stock exchange as well. So these are just key points that we've been seeing lately in the market that are clearly giving us sort of comfort when thinking about coming and invest in Ethiopia. The second point that I would like to raise here is the presence on the ground of strong co-investors such as the DFIs, but not only the DFIs, but also the MDBs and the ECAs as well. And I think, again, going back to Ethiopia, we've seen lately strong partnership, international partnership that have been put in place by line ministries, such as the Ministry of Finance. I think I saw yesterday or 2 days ago a key partnership that was conducted with the Italian government, some with the French government as well. And we've seen, as Director General Anna was mentioning, for the Bishop to Airport project, that AFDB has been mandated as the initial MLA, which is again a strong signal for from the international market that they're open or becoming more and more comfortable with the Republic, which is key for us because, for example, if you take the example of DFIs, institutional investors need anchor investors to find comfort in coming into these markets, whether it be by technical assistance support to create financial models, but also if we think about insurance or guarantee, who are able to create that cushion of comfort for all commercial banks and institutional investors who are thinking about coming in. And maybe my last point, Michael, as well, would be to look at, for us, importantly, would be to look at the presence of hard currency generating assets. As we know, Ethiopia has been a strong importer of coffee, so the agriculture space has been key to generate hard currency for the Republic. But interestingly enough, electricity is becoming more and more of importance for the Republic, generating a lot of foreign currency for the country, based on the fact that they're generating so much electricity in-house for their own country that they're able to export to their neighboring countries, such as Sudan, Kenya, and Djibouti. And this, obviously, as a commercial bank, as a debt provider within frontier market, is key, because at the end of the day, we're all lending in hard currency. So I'll stop there, but these would be my 3 key points to look at when entering the market.
No, thank you very much. Maybe a quick follow-up, 1 minute. What are the signals that you should be watching? You mentioned a few things. The stock exchange is set up. You're seeing all these different market signals. What would you say going forward in the next 12 months? What are the key signals you'd want to see for foreign institutional investors to enter?
Yes, and now that I'm thinking about it, I forgot the last part of your question in terms of what could these markets do as well to accelerate our entrance. I think 2 main points here. The first one would be to adhere to international standards. I know Director General was mentioning that already, and Ethiopia is doing it already. But for example, adherence to the AFSIC performance standards, which are very important for the DFIs, but also for the ECAs. So this is one example. And to my point again, when I mentioned relationship with international investors or creating international partnership, I think it would be very helpful, and it would also allow us institutional investors to be more efficient within the market if the public sector was actually engaging with these partners upfront before having us coming into these markets, just to ensure that we have an efficient process and a smooth process which could also meet the deadlines of the Republic. Going back to your question now, in terms of what to look for, I think that obviously, we know that the Republic is under the IMF program right now. Something that we're all looking at right now is the agreement with commercial lenders. I think that most of us in this room saw the news this morning, but hopefully, we're really hopeful to see that by the end of this year, an agreement will be reached, which will also bring more comfort for commercial banks like ourselves or other institutional investors who are considering the market. So that would be one. And 2, I would say building even more international partnership. So having, for example, being aware that more ECAs, export credit agencies, are operating within the market for banks who are considering infrastructure projects is also something that we would be paying a lot of attention to.
Excellent.
Thank you.
Yeah, I think the IMF program is the big elephant in the room. I think it's long overdue, so we shall see. But no, thank you very much. Maybe moving on to Rahel. So it's good, normally we talk a lot about corporates and large issuers, large equity, those in need of large equity injections. But it's really nice because Ethiopia, I think as the DG stressed earlier, over 95% of our economy is informal, mostly MSMEs, not even SMEs. But I think a question for you is, from your experience supporting these SMEs in the Ethiopian landscape, how do you see like this new capital market enabling better access to finance? Do you, especially obviously long-term finance, because that's where really capital markets come into value, but do you really see it will have a marginal impact, and maybe in what ways would be the question I have for you?
Thank you. So half of my answer is being answered by you, so I'm very happy you have given some value to the importance of small and medium enterprises. So generally, I think it's no secret to Ethiopia. It's not unique to any other country in Africa. Generally, small and medium enterprises are mostly functioning in informal financing area where they actually have to pay a lot of loan sharks, where they pay extraordinary high interest rates, or you have to have collateral to get access to finance. Otherwise, you end up with family funds. So in most cases, that does not give you the space to be productive, to invest in innovation, as well as research and development. So what happens is that companies actually stagnate at one space. And we collectively have created a space on which we provide people TA, which is appreciated. We actually do a lot of technical assistance. What we realize is that we make them investment ready, but then when you actually go to the financial institutions that are available, most of the time the products are not there. So they end up having the same situation. So it's the chicken and egg story, Mrs. Hannah said. So structurally, organizations should learn to work together, meaning our organization working in a small space, but we don't collaborate with others. So I think the initiative has to be taken, also led by private sector, obviously. An organization like Deloitte can do the bigger organization, but we are there to serve the bigger numbers. I see a lot of misalignment. I see a repetition of effort, that whatever we do is done another place, and then people are actually jumping from one program to another program. So we need to create a space on which we understand how we can collaborate together with all the accelerators around there. Additionally, we need also to teach small and medium enterprise to appreciate the value of technical assistance. Because what happens is that people are kind of tired of the NGO-driven training and mentorship and so forth, where we are also guilty of. I mean, we work also within international organizations. So what happens is that people actually say, I need the money. So there is also need for people to understand before you get the money, especially if you want to be part of the capital market, you need to understand the value of being professional. You need to understand being accountable and also open. So family-owned business especially, they still have challenges in absorbing equity kind of fund. So that will work. Hopefully the capital market can learn or teach people to understand the value of being professional, and it is not anything it will help to have an equity or other innovative financial solutions. So coming to the value proposition that the exchange capital market can provide is maybe looking into examples like China. It's a very unique, I don't know, I'm sure some of you have visited China. They actually have dedicated small and medium enterprise capital markets because they saw the biggest number of people are actually functioning there. And they intentionally focused on biometric, I think, technology, but it might be you can have a sector agnostic, a lower level capital market where we can actually have diverse group of growth potential small and medium enterprise that can participate into this space with a less strict regulation to allow them to grow and to understand also the level of need to become more professional. Because the way I see it is that small and medium enterprise have two roles in this capital market development. One, they are suppliers to the bigger organizations, so either a professional or any product that's been supplied. So you need to have institutionalized supply chain for the bigger organizations that are listed to function effectively. The second one is obviously what you just mentioned. They are going through a maturity growth on which they need support to actually become the large listed companies at one stage, just like Safaricom started in the past. So the role we play, I think I have mentioned, is for investors also to have a bit of patience, and it's good to see that there are already DFIs investing in the country to give some level of trust and confidence that it's a long journey, but it's a sustainable way of growing. And we stand a chance because we are focusing on green economy, we are working on in energy transformation. So if we amplify that to the investors, it might attract them as opposed to other countries. As for us, I think, like I said, we need to learn to work together. I am a small fish in the pond, so we need also the support of a bigger organization to help us understand how other organizations are working, and also be blunt to understand that there are some mistake that has been made in the industry, which is producing less innovative entrepreneurs, but more focusing on repetitive support, looking SMEs. So the good SMEs actually do not have time to join our programs. So the value that the exchange can bring is really to bring them into, to understand who are they and what are they looking for is much easier than to only work with the usual suspects. For that to happen, I'm not promoting what we have done. So we have launched a platform called Share, which actually does all this. So we connect small and medium enterprises to experts. They get access to information about anything around small and medium enterprises, registration and finance. They get access to mentors. It's all digital. And lastly is crowdsourcing platform that we are working on. Hopefully we are hoping to get the license. So these are really small businesses that has one kiosk, he or she wants to open another shop. These are the kind of organization that need this big number. And so I welcome anybody to partner with us in helping us to grow. Thank you very much.
Thank you, Rahel. It's very interesting. A couple of the points you mentioned really align with what even Vivian was saying. Understanding how to do a transaction, financial modeling, TA, etc. It touches everybody, right? The DFI, you probably deal with slightly larger companies than Rahel does, but the same issues you see a lot of times is awareness, needing that TA, etc. So it's good to see that you're trying to bridge that gap on that side. But very important points. This is most of the companies actually. It's just a lack of awareness, quite honestly. Working on the exchange, that's one thing I saw every day. There's a big lack of awareness and fear of the unknown.
Yeah.
But you're actually there trying to help these companies. They don't want to, like you said, giving up equity is not an easy thing for a family-owned business, but there's ways. It's always a journey, I believe. But lastly, but not least, Tedros Sisay. So, you're, like I said earlier, Deloitte was the first licensed service provider under the ECMA. Yeah. It would be good to understand, what can you share with us, kind of the journey from the get-go? It's been, I think, 1.5 years now, roughly, since you've entered the sector in Ethiopia, in terms of the capital market sector. If you can share us a little bit about the current market conditions, valuations, investment opportunities in Ethiopia, kind of what you've seen so far. But also, you've advised Ethio Telecom, a very large IPO. Major, you'll be looking at a lot of M&A transactions going forward, I would think. Mergers and acquisitions. How has this journey shaped your perspective? That's question one. Question two, over the next year and a half, 2 years, what's your view? There's a lot of banks. Banks need a lot of capital in Ethiopia. Possible talk of M&A, etc. Not just to focus on the banks, but in general, it would be good to get your view because you're on the ground dealing with the issuers and investors.
Sure. Thanks, Mike. Good afternoon, everyone. And thank you very much for FSD for the invitation to be here. Maybe let me start with the background, a little bit of info. So we started supporting the ecosystem in Ethiopia since 2021, when Mike and his team came from the US and set up the project office at the National Bank of Ethiopia. So we saw the potential of the Ethiopia capital markets back then, before even there was nothing actually on the ground. So we worked with our UK team, who has done a lot of IPOs from Africa to the London Stock Exchange. And then we brought the team. So we set up a masterclass. We did that masterclass, I think, 4 times. So this is a masterclass that we have been doing for free for Ethiopian companies. It's a 3-4 days masterclass on what capital market is listing and what it means to be a listed company. So then a year and a half ago, so we decided to take the first license once ECMA was formally established. And since then, so we worked on Ethio Telecom, the first IPO in the country, the largest as well. I would say the most complex, to be honest. And then the complexity came from back then, so the directive was in a draft form. So we have to go through a lot of change. I think 3 changes during that time. So we've learned a lot through that process. And we do hope we supported the authority as well in terms of changing some of the key things that need to come to the ground. So from that time on, I think it's very, now it's very normal and customary for Ethiopian companies to wait until others come into the market, and then everyone will follow through that process. And that's exactly what we are seeing. Currently, we're supporting 3 large institutions to get them listed, to get them through the capital market registration process as well. So the market has significantly changed. We have now many more investment advisors in the market, which is very good and very important. So it gives options to other to the institutions as well. And then we have seen a lot of significant developments from the Capital Market Authority side. Maybe, Rahel, one of the things that would really help SMEs is the IPO clinic that the Capital Market Authority is running. It's dedicated for SMEs, and which is actually, we have seen it working in Kenya and other countries as well. So it's very important, so that it would be good to link with that. So we have seen significant progress from the capital market perspective. And then very recently, maybe touching up on the M&A opportunities, we are advising companies, currently actually 3 international banks that are looking to come to Ethiopia. So we're advising them as transaction advisors, looking into the market, what are the opportunities and how they should structure those transactions. And one of the areas that they're looking at is the capital markets as well, the fact that there is an authority, there is a directive and then governance in place. So a lot has changed since 2021. Mm-hmm. But the 2 critical things, right? So you touched upon the valuation, which Vivian and the rest of the panelists are talking about financial model. It looks very small in other countries because we do it on a daily basis. But it's when it comes to Ethiopia, it's a lot of complexities that you see. So one of the issues that, of course, investors will face, and then as practitioners facing, is also the issue of valuation, from information quality, as well as getting to the right discount rate. You really need to have that significant experience in frontier market, because especially the past 2 years, a lot of the macro variables have been changing in Ethiopia. And doing valuation in a country that, the key variables are changing significantly is always risky and very difficult as well. So from a valuation point of view, you will see a lot of back and forth, but I think things are settling down now. We're seeing the long-term inflation in Ethiopia is coming down, which is a very good indicator. Also some of, because at the start, discount rates were very, very high. So it's very punitive for local companies to sell any shares for foreigners. So that's coming down, which is a very good sign. Maybe from M&A point of view, so one I mentioned in terms of the banking sector, which is now the largest opportunity, of course, the country is presenting. There are a couple of banks that are looking into Ethiopia. When would they decide to come in? That would be dependent on many things. One is of course, some of the risks that they are looking into the country, maybe from a security point of view, but also the fact that the quality of information and all those things are pushing investors a little bit longer to come into the market. That's one. The second one is we're seeing a couple of traction from renewable energy perspective. We've worked with Japanese government and other DFIs in terms of seeing what are the opportunities in the renewable sector. More specifically, recently we worked on a very large hydrogen project that's looking into Ethiopia and Kenya. So those are, I think, would be very game-changing for the country. We've looked at a couple of interesting projects in the manufacturing sector. And then I would say healthcare as well. I think we hosted more than 9 UK healthcare companies in our Addis office. Who are looking to understand what the healthcare industry looks like. I think healthcare also presents really a huge opportunity in Ethiopia.
Excellent. No, excellent. It's good because, I think you've seen the journey over the last 4 years, similar to kind of what Vivian was saying. There's a lot of changes, but also challenges, obviously. The valuations thing, one of the things you see is because you've never had a capital market. So there's really no incentive, if you really think about it, to properly do financial modeling. If you're just dealing with bank finance for the most part. So this is kind of I would say, intangible changes that are happening, that are good overall for the economy, but also kind of to professionalize the sector as well. But I think on valuations, data quality, we would expect improvement. I think on the M&A side, it's very interesting to hear this actually. A lot of this, so I know the DG and Ambassador, His Excellency, talked about the macro picture. So here we're getting a micro kind of understanding what's going on the ground and actually where the interest areas are. I think, you know, these things always, we don't have enough time, but maybe in 1 or 2 minutes, I have a question for all of the panelists. This is really more about capital market service providers. So if you have a perspective, it would be good to get, you know, a minute or so from each of you. What advice would you give to global capital market service providers considering entry into Ethiopia today or partnering with Ethiopian institutions? I'll just go in the same order, if you have a view on this, and maybe you can explain it from your perspective as well.
Okay, I think I'm reaching beyond my depth here, but if I were to give advice, it would be to reach out, to link with the various components of the economy, right? Mm-hmm. I was describing how in London you have ADFI that is very well funded and very stable, very far away, mentally and emotionally and strategy speaking, to just a few stops away from the City of London, which is holding so much capital. Why is that happening? Mm-hmm. Any capital markets ecosystem, especially one that is country dedicated, should be thinking about, as you already are, okay, these are the larger companies that I want to serve. These are the projects that I want to support. How do I link up with the IMF current program? How do I make sure the NBE is providing the right regulatory framework, the right transparency, the right engagement with the international community? How are they communicating debt sustainability, right? Because the City of London, when we talk about Ethiopia, they ask, what's happening with the debt? All of the components, really we need to do a better job at linking towards each other to be able to kind of support that overall economic development story, which at the moment feels a bit, well, it's less fragmented, but we have a long way to go.
There's a lot of frictions already, you know, in terms of connecting the dots.
Yeah, I wouldn't say necessarily frictions. Yes, maybe, but maybe as a reason of ignorance, as not understanding each other, as not sitting down and thinking about where are your goals, where are mine, where can we connect to double down, maybe. Yeah.
Very good. Thank you. Similar question.
Yes, thank you.
How do you incentivize other service providers to come in is kind of the question. Maybe more relevant for you as well.
Yeah, definitely. I think I'll echo what Ambassador Brooke and Director General Anna mentioned, which was really focused on avoiding all the biases that there are now on the Republic of Ethiopia, and more specifically not to overlook this market. I mean, I won't repeat the macro indicators that we've seen a bit earlier today, but Ethiopia is booming. It's the second largest country on the continent. It's part of the top 10 countries in terms of growth perspective, but also in terms of resilience and growth. I'm pretty sure you've all heard about the GER, the Grand Ethiopian Renaissance Dam, which was mostly self-funded. And we're talking about USD almost 5 billion in total cost, and that's quite impressive for a country when you think about it. And then thinking about the new projects that are ongoing as well. You also mentioned the Bishoftu International Airport, another large-scale project of 10 billion USD in terms of capital cost. So all these things put together, for me, I think are clear facts that Ethiopia is a market that should become a priority for institutional investors and commercial banks.
Yeah, so I guess due to the fact that we have not worked on the professional service as much, you would see lack of some skills in our industry. So if an organization or a professional service provider would be interested to come in, we are a lot of us, so I would come through partnership and help to understand the internationally accepted principles for us to collectively grow. Because I understand also sometimes you have to test the water before you enter into the country. Mm-hmm. So what we do, for instance, for Dutch companies, we offer them an opportunity to come through us to explore the market. And then once they decide, so we kind of host them to start a business. And then we would hire the first person, 2%. And if they are interested, they stay. So having this form of partnership will help to understand the market with less risk than it would be if you are to move fully. So I would appreciate, I think, a partnership model for Ethiopian. Additionally, I think we need a dictionary of high-performing companies in Ethiopia for people to feel like, okay, this is how I'm going. They have taken the risk. Why should I not? And we are open to talk about how we see it. But I think there is a lot of things we can learn from other countries where we show what we have, and we are too humble, I think, and we stuck around in the challenge. We are trying to sell how resilient we are, but the reality is, I mean, the country has performed well without little foreign direct investments, and all the reforms are showing that we are ready for something new. And I think we should not be shy away from telling the story and promoting existing businesses to attract more potential companies without risk, with less risk at least. Yeah,
thank you.
Thanks, Mike. Yeah, so maybe you might wonder why Deloitte is inviting competitors into Ethiopia. I'm enjoying monopoly in that, but as jokes aside, I think, so we've done a couple of exercises here in that market, especially from the equity capital, debt capital markets, and then the wealth management side of it. And we've done 5 years of projection. Don't ask me exactly the numbers, but there is significant amount of capital that's needed in that country from the banking sector, where we need to meet requirements from Basel I, moving from Basel I to Basel III. There is significant amount of capital required from the businesses, manufacturing, as I mentioned, renewable energy, and every single sector requires significant amount of capital. And then this requires advisors. We are the transaction securities advisors. I'm not an investment bank, so I cannot underwrite. I don't have the balance sheets. Every single business needs an underwriter. Currently, if you look at Ethiopia, the investment banks we have are very, very small, and they cannot even underwrite because of the capital they have is very much limited. So we need to have strong investment banks in the country, more so from a debt market and wealth management perspective. If you look at the collective investment scheme opportunities in Ethiopia, it's huge. It's much larger than Kenya, which is, I think, the third largest in Africa. So this brings a lot of opportunities for investment banks and market makers. And then as Deloitte, we work very closely with investment banks and brokers as well. We've done, I think, more than 25 listings in the past 5 years from Africa to London Stock Exchange. So the fact that those investment banks, the lack of those investment banks in Ethiopia, is you can actually see it. And then bridging that gap in the country. So there's huge opportunity in Ethiopia.
Very well said. Thank you, everybody. I'll try to briefly summarize very quickly. I think connections is an important point in terms of connecting the ecosystem players, even internationally, but even domestically, I think, between the advisors. This is very important. You know, we're building an ecosystem from scratch. You know, you have the market infrastructure, the regulator, etc., but now building the ecosystem out, bringing the investment banks, the DFIs all together on the table, the local partners, like Rahel said, is very important. I think the Ethiopia story, the macro story, needs to be told better. It's kind of the perspective I hear from you, but also needs to be advertised more. Partnerships with local partners, I think, is very important. Ethiopia has its own contextualized kind of thing. So I think it's important to really understand it on the ground. And then obviously there's a need for experienced service providers. Also is another message we're getting from the Deloitte side. I think we have like 8 minutes, I think 8 minutes to be exact, for some questions and answers. So maybe a couple of questions from the audience would be good for this esteemed panel, for those of you in the room. No questions.
You were so clear.
Ladies first. I have to bias.
Thank you. Hi, I'm Rakik, and my question is more for Rahel. When you were mentioning SMEs, what is the threshold for fitting into SME for it in the Ethiopian context? Like, what is it? Like, how many employees do you need? What's the capital like that you need?
Yes, I will have a fight with a lot of people because the actual definition has not been defined. So some focus on number of employees. We worked with UNDP on IFL when IFL was formed. we defined small business having 5 million income, up to 20 employees, and then the medium is above that. But I can't really be, especially not at the Ethiopian Summit, because it's still very challenging. I think the new regulation has changed it also. So that's also maybe one thing we have to work on, really aligning what it means to be a small and medium enterprise is probably the first step.
One more question. Anyone can answer this. Is there anything that we're working on when it comes to inter-Africa trade versus like everything, most of the things that we focus on is export outside of Africa. So is there anything being done within inter-Africa trade?
Inter-Africa trade.
Yeah, I'm not sure if it's built on, but I think it's outstanding opportunity that Ethiopia should take advantage of, because the recently agreed, I think already 2 years ago, agreed trade agreement is probably one of the biggest agreement among nations. 54 countries have signed, 53. So there is a great potential for inter-Africa trade to take place. I'm not seeing a lot of activities, but maybe I am wrong on that. Anybody else? Yeah.
Just to add on top of that, I think things will change. So Ethiopia did the first export under the Africa-Free Continental Trade, which is a big milestone. Yeah. There are currently 14 countries trading in that platform. We are supporting, I think, 3 country investment commissions currently, but it's very important, I think, for some of you just to understand. If you look at Kenya, for example, 40 to 45% of the Kenyan export goes to the regional, through the East Africa communities. And this actually helps Kenya to stand every time there is a shock in global markets. So it really helps them to stand by themselves. So Ethiopia is going through that process. I think Africa-Free Continental Trade will really shape much of trade in Ethiopia.
If I could add on trade. So I think the ecosystem, the infrastructure framework in which trade takes place in Ethiopia, I think the country has done a lot to push it forward, and I think more needs to be done to strengthen it. Yeah. So it's the hub of Ethiopian Airlines, which is connecting the entire continent. We could do a panel just on that, because I cover other countries and that are not interconnected. I cover the DRC, and I am able now to fly from Kinshasa to Lubumbashi thanks to Ethiopian Airlines. But anyway, this is not about the DRC. Aside from airlines, Ethiopia is served by Djibouti, and then it's served by Berbera Port. And we, BII, invested in Berbera Port. If you ever had the opportunity to go, it is a phenomenal infrastructure piece. You can eat on the floor. It is just fantastic. Mm-hmm. And yet it's still underutilized, right? So a big encouragement to the Ethiopian government to really get that trade transit agreement, because I think the country is being underserved, that this market is being underserved by just giving it one port. Which is not really kind to Ethiopia. Really, it's expensive, it's inefficient, and Berbera is sitting there as a jewel to be kind of tapped at the same price or even less, because the idea is to really compete eye to eye against Djibouti to improve the quality of the lives of the Ethiopian people. Ultimately, it's the consumer that is going to be benefiting from that. And I have to say, colleagues who work on debt in infrastructure at BII, they look at all sorts of opportunities when it comes to transit, transport. They look at opportunities using Ethiopian Airlines, but they prefer shipping. They prefer using the ports for climate reasons. So really strengthening those ports and the corridors that connect to them is an absolute, hopefully, priority. Thanks.
Thank you. It's good everybody had a view. Maybe just 1 or 2 questions. I think we're running out of time.
Sure, actually building on Sam here. Familiar faces all on the panel, and thanks, Michael, for coordinating this. My actual question goes to your last word, Vivian, climate. One of the things that we've just seen pass, of course, is the National Climate Strategy for Ethiopia, with quite strong voluntary carbon market and other regulations. Sort of now the foundation is there. Would be interested in the panel's reflection on the opportunities both in the carbon markets and the green finance space more generally. Thanks.
Maybe start with Raisa, if you have comments.
Yes, I mean, on the climate space, maybe in terms of background, MUFG Bank is doing a lot of partnership with the Green Climate Fund, which is a platform built by the UN to basically manage capital that is dedicated to climate change, more specifically adaptation, but also mitigation. And one of these platforms is called the Green Guarantee Company. And we're partnering very closely with them to work on key markets, which includes Ethiopia, actually. And what they do is that they provide guarantees up to 50 million USD for transactions that are climate focused, whether it be on the adaptation or the mitigation side. And I think, as I was talking actually to Director General Anna, that such platforms and such tools actually could be tapped into in Ethiopia, and especially thinking about the green bond market and other potential SME transaction who would be looking at institutional capital while having the benefit of having a guarantee. And I think coming back to your point, Vivian, I think that it's once again a question of building partnership and talking to each other to know how, because there are so many platforms doing so many things and so much capital available, actually, especially within the climate space, because it's a key priority nowadays. I think the onus is really on us to make sure that we talk to each other and to share all these opportunities with the key stakeholders who can use them. So that would be my bet on climate change. I'm happy to discuss more offline in regards to the Green Guarantee Company.
Thank you.
I mean, I'm not a climate expert, but I would say, to quote the contractor with whom I spoke not long ago, he said, it's easier to build a house from scratch than to remodel one, right? And when you have the opportunity of creating so much, right? You were talking about climate mentality, all within the layers of everything that is being built. I guess Ethiopia benefits from hindsight in a way that perhaps Western countries don't. But for us, obviously, if we see an opportunity that is climate focused, there is a wind project that is looking very interesting and we're looking very closely at it. Of course, that would be interesting, but climate needs to be embedded into every single transaction falling, whether it's resilience or adaptation. And it's great that the government articulates at least a vision on climate from homegrown economic and forward.
I think just in the interest of time, maybe one question if there's any more, just to get different perspective. If not, we can close, I think. Did you have a question? Last question, and then we'll do the closing remarks.
All right, thank you so much. This was wonderful. I come from the private sector in Ethiopia, and my senior thesis was on stock market development in Ethiopia in 1998, actually. So, yeah, 1998. I'm dating myself. So this is great to see it coming to fruition. Quick question, actually, Hannah mentioned the fact that, you know, in Ethiopia, the financial institutions were privately owned, are privately owned. There was a great primary market that has taken place. So there's great start to this whole success that we will see in Ethiopia. In your opinion, what is an African stock market or secondary market that is a great example for Ethiopia to sort of take lessons from as a leapfrogging mechanism? Because as you said, we're building something new, so we might as well take lessons from others' experience. What does that sound like?
Is this addressed to anyone in particular, or
open to the whole panel?
Yeah, everybody can
start. Yeah. Yeah.
Hmm? Exactly. Oh, sure, I can add. Please, Teddy.
Thanks. I think from a sub-Saharan Africa perspective, the three markets has been South Africa, Johannesburg Stock Exchange, the Nairobi Stock Exchange, and the Nigeria Stock Exchange. This has been, they have seen a lot of transactions. Lately, I mean, the Nairobi Stock Exchange has been almost dormant. The things are changing now. The government is trying to go through privatizations to promote it. So this has been the three stock exchanges that has really promoted a lot of the transactions in Africa. But you can also see Morocco Stock Exchange from the northern side as well.
Any other views, Raisa or Vivian? Or,
Yes, I'm happy to add something, maybe just a comment. I had the honor of joining the launch of the stock exchange at the beginning of the year, and something that I was very impressed to see was the participation actually of other stock exchange, whether it be the Nigerian stock exchange who were present, but also the Ghanaian stock exchange, if I remember correctly. And I think that while it is, I mean, it is new and I mean, a renew, if I can say, for Ethiopia. I think that it's really about learning from each other. So I would love actually to know, if it's not actually existing, how these stock exchange are exchanging information and insights on a monthly, on a yearly basis, because I think that it's an ongoing process. And while the Nigerian stock exchange has been implemented for many years, I believe that they still have a lot to learn from the Ethiopian, and maybe it's a call for action for the Ethiopian market to see if this could be implemented and how successful it could be.
I can add. I think the DG mentioned. So one thing, we had an advantage building the exchange. I was part of the project team at the beginning, so we really looked at the different markets. You know, structurally speaking, public markets, it's very hard. Most of the world companies are not going to the public markets, meaning stock exchanges. They're going more to private. But one thing that helped us coming in 24, 25, 2023 to 25 is we looked at Ghana, we looked at Nigeria. We saw, you know, JSC in South Africa. We tried to take the best lessons from each one. So Nigeria has 3 exchanges doing what we're doing in one exchange. Some very successful. The NGX invested in the Ethiopian Stock Exchange, but there was a separate exchange that did the debt market. So we really tried to take those practices. So we were picking bits and pieces. Morocco was a very good example, but I wouldn't say one particular exchange. It's really, some are doing some things better than others. And then you also try to see kind of in the Asian side. A lot of the vibrant stock exchanges are in emerging Asia. Malaysia, Singapore, etc., but also some of the smaller, I shouldn't say smaller, more developing, Vietnam. So we had a whole plate to look at, and we tried to build solutions. Like our money market is a very unique product, I think. We just saw that there's a need for it in Ethiopia. Not a typical solution you provide for stock exchange, but we have built it, and I think, as the DG said, it's been very successful. But the debt market is also a focus for us as a stock exchange, and then obviously listings. We want to attract as many listings as possible. We need more investment banks. But really, to summarize, I would say you take a holistic view. We were one of the last countries to have a stock exchange. So in a way, there's a lot of benefits to that, but the regulatory framework also has been very conducive, because you're using the kind of the latest rules as well. You learn from others. So a combination. Morocco is good. JSK is good for certain aspects. Ghana is very good for certain aspects. So it's a combo. Hopefully we've addressed your question. I really appreciate everybody's time. I think I'll just give a few minutes for DG Hanna to give closing remarks. And thank you so much for my panel. You made my journey.
The things I would like to say, but first I'd like to say thank you for coming to Ethiopia's Country Summit. I'm sure we have convinced you to consider Ethiopia to be your next investment frontier, whether it's in capital market or in any other investment options in Ethiopia. The options are endless. As you've heard in the financial sector, the options are endless. In the capital market, as you've seen, we have in terms of licensing, we have 16 and more than that categories of licensing. In terms of investment, you can be retail investors, or you can convince your institutions to be institutional investors in Ethiopia, as there are a lot of opportunities to invest. In terms of financial sector, in the banking sector, in early this year, a new proclamation was out allowing for investors to come to Ethiopia and be part of the financial institutions in Ethiopia. You can establish a subsidiary in Ethiopia, acquire a bank in Ethiopia or any financial institution in Ethiopia. You can be in different modalities. Actually, the new regulatory framework provides close to 4 kinds of modalities for foreign investors to be part of the financial sector in Ethiopia. So in other sectors other than the financial sector, as you've heard it from the panelists, the energy sector is, one of the priorities. Green, housing, infrastructures, education, healthcare, and many sectors are open in Ethiopia as well. So we would be delighted to have you in Ethiopia. If you have any questions regarding investment, you can go to Ethiopian Investment Commission's website, Ethiopia Capital Market Authority's website, and we have also a desk for you to have access to information specifically to foreign investors. You can direct your questions to us, and we're very much happy to explore those options as well. I thank you so much for being here.